Well, hello and welcome to January 21st, 2022 update of the portfolio. What you have in front of you is the latest numbers. Um, First things first, for the week, it was a pretty good week. It started off with Columbus Day, so we're missing Monday, only 4 trading days. And all four, so starting on the 18th and ending on the 21st, altogether, we've managed to scrape up a return of 1.12%. On the other hand, I've added a separate measure here, which is a derivative directly from this chart here. This represents the S&P 500 and what has happened over the last 4 months. So if you look at that, this week the S&P has lost 5.8%, and in that time I have made 1.12. If I had a long-only portfolio, unfortunately right now I'd be down almost 6% for this week. And since we are hedged against market crashes and pullbacks with a long and short portfolio, we're actually up. It's not much because the market has been sideways. It's been all over the place. Obviously, this week it's been down. Last week it's been all over the place. The week prior to that it was also down. With this portfolio, the way I trade, what it does is that it takes away that risk of losing everything that you have in case there is a major pullback, like 50% or something, I will definitely walk away and be able to survive to trade another day. Whereas if you're long only, chances are you're completely wiped out. So yeah, there's that. Let's go through the trades. The VIX, obviously it's rallied today to 30. Anything above 25 is you pretty much want to start reducing the size of a portfolio. In my portfolio right now, I'm only 45% exposed, so about 55% cash. I'm not worried about it. That's more or less where I would want to be if this happened. I was kind of expecting this to happen. The 10-year, that was yesterday's. Let's refresh that really quickly. This number here, 1.83, is going to change to whatever they changed it to today. Just quickly going to go through the daily charts. Actually receded a little bit. The yield, let's refresh the yield, see what's going on with that. It's taking its time. And it's flattening. And notice if you rewind that 5 seconds back, that the curve has actually slightly moved down. That's the flattening of the curve. If the thing was going up, that's the steepening. Now, USD Canadian, let's refresh that really quickly. Where are we at today? This is price from yesterday. And 25.74, so it's gone up a little bit. Where is gold at today? And you see how quickly this does this for me? All I have to do is click refresh and the numbers just populate on their own and chart updates, and I get a nice update of what's really happening out there right now. I've already updated prior to starting this video. I've updated all my live trades and this one here, which I haven't entered yet. So far, Purple Innovation is still going down, so it's not a good long. And Beyond Meat, it's confirming to be a pretty good one. If I took that one, I'd be up about 7% so far. But as you remember, a trade is not a trade unless I have a long and a short for it. Just a short exposes you too much to market risk in case of a rally, and only a long will expose me to the risk of the market crashing and then taking with it all my profit. What I'm going for is, once again, the ratio between the two, and as long as that grows, I'm happy. Oil's gone down in price. It's currently at 84.79. So let's go through our trades. Accenture versus Zoom Communications. This was the one which had a big loss from the get-go, but I didn't close it because Accenture is a very volatile company. It goes up and down quite a bit. And as such, I decided to leave it open, and still losing a lot on Accenture, but Zoom Communications offsets that very nicely. And currently, this trade is actually in a profit of $12.21. And if Accenture does take off to the upside, this is going to turn into a really fast, really exciting trade. Currently, I'm in a profit with it, even though this one here, the Accenture, is losing over 16%. Zoom Communications is winning 16%, so it offsets that nicely, and as such, it's still a good trade. It's a viable trade. I'm not losing on it. Let's go to Cushman & Wakefield and Itron. We're at 13.26, a nice profit of 125.23. And once again, this ratio here is a nice steady increase, that makes me happy. Both prices are reflected here. This would be your Cushman and this would be your Itron. And you want those to be splitting apart or heading away from each other, creating a nice ratio in the upward direction. And Viva Partners and CRISPR Therapeutics are at 25.8. Today's gain was 1.7%. Current profit 121. Steady growth with some bumps along the way, but that's to be expected, just like with anything else. And yeah, as soon as this reaches 30, I will be adding a little bit more to it. I'll reevaluate and see if I want to. Otherwise, I'll just close this trade and call it the end of the day. But so far, the CRISPR CRSP here is the big winner in this one. It's almost 20% return so far, and that's evident in the price action. Abbott Laboratories and Lululemon Athletica. Once again, this was a negative, and currently we are actually pretty good. Today's spread change was 3.93%. There was some losses at the beginning, but as you can see, the short is outweighing the long, similar as with the Accenture Zoom. This one, however, is at 6.29% spread point loss. And we're starting to make a little bit of money with it very soon. It's not evident just yet, but that will change by next week. I should be in the profits on this one. Invitation Homes and Rivian Automotive. This is the last trade I entered last week. We actually have gone through this trade as I was entering it. And currently we are at 4.57 return with an $80.39 profit. Our spread has moved up by 12%, and Rivian is the big winner. Invitation Homes actually is losing 22 bucks, and that doesn't bother me much. Now, Purple Beyond Meat. Now, this is something that I've just actually entered a trade order. Sorry, not a trade, an order. Beyond Meat. It seems to be sliding very nicely. That's the yellow or the orange line over here. But Purple Innovation hasn't found the bottom yet. And if I look at the chart, when I look at the chart, the bottom for this one happens to be about 4.7, which is the support where a lot of resistance happened last time. And that is where I've entered this order to happen, which is about 4.7, which is down here. So I'm not entering this trade until that reaches there. And that's where I'm expecting a big bounce back, at which point in time this trade would have been working out pretty well. If I had entered this last week, I'd be currently closing this trade already because it was mistimed. Remember all those trades a couple of weeks ago, 3 weeks ago now? I've gone in, I've entered 20 trades, they all seem great, but the timing was not there. I didn't look at the timing. I just wanted to have a fully operational portfolio and kind of work at it backwards. I had to close off a bunch of losing trades, losing over $300. Let's just actually go back to that right here. So $373 lost by closing 7 pairs and opening up this one here, Abbott Lululemon. And since then, that's all I have open. I haven't added anything else other than Invitation Homes and Rivian, which we should probably, that was on the 18th. Let's add that on there just so we remember. Opened INVH Rivian here. At INVH Rivian here. Okay, and so that's this trade right here. And as you can tell, explosive growth. It's maybe 3 days old, and we're already at $80.39. And that's the difference between timing a trade and then just going in because the charts look good. I've actually gone in. Sorry, because the fundamentals look good. Sometimes the fundamentals can be great, yet the chart and price action are not, and you have to wait for the opportunity to happen. If you just go in, yeah, sure, you might get lucky, you might get a lot of gain all in 1 or 2 days, with luck. But this is not about luck. This is about setting up a perfect scenario where the fundamentals and the technicals, including price action, line up perfectly. And if those never line up properly and the price does go through the roof and you end up missing an opportunity, it's not losing. If you end up missing an opportunity because you haven't entered the trade, nothing lost, nothing gained. So you're better off being safer than just jumping and going for everything that looks so shiny. Like I said, fundamentals, technicals, and price action are very, very important. All those need to line up, and then trades look a little bit differently. Like right off the bat, you're getting into profits instead of ACN Zoom. Remember those, and Abbott Lulu. I had a lot of side action before they actually started making money. It's because I jumped in and I wanted to just have a trade open so I can start this video series and show you how this stuff works. But since then, like I said, we have closed those positions. I know this is showing you to my portfolio manager and it's not the actual trading, but this is what these video series is about. Once in a while, I'll come back to the charts. I'll show you the charts. I'll show you my actual live portfolio. I'll be covering up my account numbers and whatnot. You don't need to see those, but that is my actual live open book right now. Um, so I've pretty much covered what I wanted to cover. But Abbott Lulu. If you look at Abbott Lulu, right now, actually, when I look at the chart and the platform, it shows me that it's a really good time to buy Abbott. But since I already own it, I'm actually thinking of buying some options for this because this has very good potential for explosive growth to the upside. It's very near a bottom of the channel currently, as I explained in the earlier video when we actually went through the charts. If you want to go back to that, by all means, click the button in the top right corner. It will show you a playlist of the entire series. Watch it from the beginning. It may be boring to some, but if you start listening, you'll quickly realize there's a lot of information in here that will end up saving you a lot of money in the process and probably make you quite a bit. So yeah, by all means, go and watch it from day one. Okay, that's the reason I'm doing this series, so you can see that this is possible for just about anybody. And yeah, that's where we're at today. So summary 334.06. That's the unrealized P&L, which pretty much starts outweighing any losses over here from last week or 2 weeks ago. I could have avoided all this by just timing the trades a little bit better, but I didn't. So whoop-de-doo. That's over and done with. Abbott. Why would I want to enter an option trade on Abbott, as I mentioned earlier? Well, first of all, January 26th, it's currently January 21st. January 26th happens to be their earnings day. Now, fundamentally speaking, this company has been doing phenomenally well. I've actually entered this trade at 135. It's currently at 125. Why would I want to buy more? Well, like I said, that was a mistimed trade. Right now, this happens to be at very near to the bottom of the channel in an upward trend. If you look at the chart of it, do some painting on it of trend lines, you'll realize that very well. And I wouldn't mind taking a position, taking on a long and a short position in the options market just to get on top of that because I believe there'll be some explosive growth for this stock. It could literally go up to 145, 150. Now, it may not seem that way right now, but that is what I'm seeing because fundamentally speaking, this company is great and every stock goes through ups and downs. Every stock gets sold off and every stock gets bought. So it just looks like a good time to buy. So I'll be thinking about that on Monday morning. And if I am going to go enter this, then I'll enter this towards the end of the day on Monday. Now, if until that time everything stays as it is right now, then I will be entering one option position for this and one long and one short option position. And I'll go through that process just to show you what I do about it. It's called a bull call spread, and it's just essentially it's a bought and a sold option. And yeah, we'll make that in a different video. There's a little bit of explanation to do why would I want to sell an option. It seems scary for some people, but it actually is there to prevent the time decay which an option has. And by selling one, you're actually taking out any time decay that you have on the long option. But once again, I'll get to the details on that, and we'll go from there. So, the Lululemon would have been a good option, obviously. Like if I had sold one or bought a put for this, I would have made, quite a bit of money on it. That would have been like 4,000 bucks. But I'm in slower game. I'm in the equities only portfolio right now. And if we are going to add some options to this, for now, I'm going to do maybe one or two. Eventually, I'm thinking maybe a 50-50 split. But for now, we're just going to stick with long and short equities and maybe one or two options. Okay, so that is the end for today's update. Thank you for sticking around and joining me on this. Thank you very much, and we'll see you on the next one.